Good morning, everybody. It's the 23rd of February. We're Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. Good morning, Steve.
Good morning.
How you doing?
Yeah, not too bad, thanks, mate.
Superb. Looks like we're back up and running on TradingView after a bit of a bug with that yesterday. I
Yippee!
think it did actually publish the video, but just wasn't in real time. So welcome to everybody watching today. If you want to get involved in the stream today, please feel free to post up any questions or markets that you want us to take a look at, and we'll do our very best to cover as many as we possibly can above and beyond what we normally cover. So we're going to go through the latest headlines, going to go through a load of markets, then we're going to talk about what we can expect for the day ahead, as well as our gun to the head challenge. So let's bring up the headlines to start with and see what's been moving markets over the past 24 hours. So yesterday we had some data out from Germany, the IFO index, and it disappointed the market. The IFO index edged higher to 91.1 for February from a revised number of 90.1 the previous month. But however, this was slightly below the consensus forecast of 91.4. Although there was significant increase in the expectations index, this was offset by a small decline in the current conditions index. The IFO stated that Germany will not escape recession, but that the downturn is likely to be mild. We had the Fed minutes yesterday. That was the kind of main event for yesterday. That was out at 7 p.m. UK time. And the Federal Reserve minutes stated that several participants advocated rising interest rates by 50 basis points at the policy meeting, although almost all members eventually agreed that 25 basis points was appropriate. As far as inflation is concerned, members stated that inflation had eased, but they needed to see more progress and that the tight labour market would contribute to upward pressure on inflation. Participants considered that risks to the economic outlook were skewed to the downside, and some considered that the risk of recession in 2023 had increased. The dollar retreated from intraday highs yesterday. US Treasuries managed to avoid further selling on Wednesday as the 10-year yield traded just above 3.9%. Risk appetite, however, did remain fragile, and the US dollar secured net gains on the day, but equity futures did regain some ground on Thursday, which curbed further US currency support. We've seen some oil price slides as well. We'll come on to the charts of that in a bit. The oil price came under pressure yesterday amid fresh doubts over demand trends and elevated inventories. We do have oil inventories today, so that will be well watched. The global benchmarks dipped over 3% yesterday before stabilizing, so that could be an interesting chart to look at. And tomorrow we've got the Bank of Japan testimony. The Bank of Japan governor nominee is due to testify to Parliament on Friday with confirmation hearings. His comments on monetary policy will be well watched with scope for renewed yen volatility. So if you've got any yen positions, you need to be aware of this because there is going to be some significant volatility potentially overnight on yen. And I saw some news about them potentially considering hiking rates, which is not something they've done for a very long time. So that could be quite pivotal. So, Steve, let's take a look at some charts, shall we? Do you want to kick us off with a look at cryptocurrencies?
Yeah, sure, mate. Let's take a look at Bitcoin. We've seen price action over the last 24 hours bounce back. It was moved aggressively to the downside after stalling in front of the resistance at 25,400. We managed to get down to a low of 23,594, and then we bounced. It's a little bit of a bullish hammer type candle. Bouncing off that, you can see these like the cloud indicator that I show on the sort of like lagging lines of this. I won't go into the detail of what they are, but it's all to do with like moving averages and previous price action, giving us an indication of where support and resistance are both now and in the future. There you go. Overnight, we have rallied and pulled back a little bit from this rally. So let's dive down into a shorter time frame, really see where we are on the 4-hour chart. Oh, there we go. The 4-hour chart was still in a slightly bullish trend above the Ichimoku cloud here. We've had a little bit of a reversal yesterday. You can see this dip down, morning doji star formation formed and the rally higher. So really sort of like looking like it could have a potential to retest that 25,400 resistance. On the hourly chart, we haven't quite confirmed. We've tried to break through the cloud, this resistance here, but it's quite a dense resistance. And we can see there's other resistances up above. So yeah, had one attempt at it, maybe looking for that second attempt. Or is this just a a two-wave correction, possibly. Let's look at Ethereum as well. Similar sort of price action here. We found support on the 4-hour chart. Morning doji star formation formed and projecting higher. The hourly chart also having a little bit of a stall at the hourly cloud. Resistance in Ethereum 1730, that's the key level. But you can see we've formed a nice bottom pattern in this hourly chart where we've sort of like seen the spike lower on the Wednesday and the nice reaction from there. Maybe we could look at from a Fibonacci perspective. Where do we see the resistance coming in? Around about these levels, 61.8 is around about here. We could probably lift that up to the actual start of the sell-off, the waves, the first wave here, correction, second wave correction, and third wave, fourth wave down, or fifth wave down, basically, and then the correction here, mild correction. 61.8%, 1676, that's the interim resistance to watch, and see if we can break above that. If we can't and we get below 1660, then maybe we're extending the move lower. Ripple hanging around the 69.68 level. This is like 40 cents, seems to be quite pivotal if we go all the way back. Let's take a look at maybe a daily chart on that. We can see we've got a downward trend in resistance that we're trying to break up above. We've got support from the cloud as well. So levels to watch there. And you can see from a volume perspective, support is a little bit further down, around about the 35-cent level. But this downward trend in resistance is really proving a tough act to punch above. We've had a crossover the 100-day over the 200-day moving average, which is negative. But it looks likely we're going to get a golden cross, which is when the 55 or 50-day moving average crosses over the 200. So that looks likely if price action remains supported and pushes higher over the next few days. So watch out for that. That's enough of cryptos, unless anyone else wants me to look at something different. I'll move on to the daily chart in gold. We've moved down towards the support level, 38.2% fib retracement from the rally from the 3rd of November all the way up to the 2nd of February. We've had the correction lower now, and we're trading around 38.2% fib. Support clearly coming in just below this level, 1820, and then 1800 to 1790 would be the next target if we manage to break there. We're trading within the cloud. It always tends to get a little bit volatile when we trade in this Ichimoku cloud area. Yeah, so let's look at the shorter term time frames. On the 4-hour chart, we're bearish. We're in a trend lower. We've sort of like broken down from the bearish flag. The measured move target is actually down at 1790 level we just mentioned on the daily. And on the hourly chart, we're also trending lower, as you can see. But it's a gentle trend. It's a nice civilized trend, we'll call it. I mean, we have, looks like we've posted a higher low here, so be aware of that. But the last couple of hours of price action have been negative, so maybe a retest of 1818 is likely. Taking a look at crude oil, negative after yesterday's. Let me get the daily chart up. No, that's not daily. Negative after yesterday's oil inventories. We've broken down yet again. You can see there's clear resistance up here at where the volume really gives us a really nice indication of where most of the trading has taken place over the time frames. And that sits above around 77.62. We have got a support level coming in at 72.58. Currently, we're trading at 74.08, so not far away, only $1.50 away from that support level, and that has been tested twice and reacted nicely from that level before. What's it going to do this time? Because we formed a lower high in between as well. So let's see if it can manage to get through there. The major level of support comes in just at $70. This is WTI crude oil. Brent crude oil has similar price action. The levels to watch really is the $79 level, which is where we're heading, and below that we got 77.60 as a higher low that was posted, and the major level of support coming in at 75.27. 86.70 and $89 are the resistances above on crude oil. Natural gas, again, teasing me. It is teasing me, Joe. Looks like it's forming a little bit of a bottom again. I'm not going to get sucked in surely to that, but it doesn't look too bad. It's bounced off just in front of $2. The measured move target of the head and shoulders formation is down at 135. Are we going to get there or not? As we saw, we had a sideways correction, so potentially a bearish flag. We've broken down from it. We've actually retested the underneath of that flag yesterday and rejected, closed lower, but we're looking to retest again potentially. So slight optimism, should we say there, but we've seen it before. Look, we've seen the same sort of price action before. So as I say, I don't think I'm going to get sucked in, but a clear level to watch on here is the support at 210. Resistance will be yesterday's high at 241. A break of either side, and maybe go with a trend, I suppose. Shall we take a look at FX before I dive into indices?
Yeah, let's do that. Let's take a look at dollar index to start with. So as we mentioned in fact, just look at the daily quickly on this, because it kind of backs up my thoughts about there being a reasonable correction. Sorry, the weekly on FX, on dollar index. So big wedge formation here that we've got on the weekly chart, and we broke out of that back in January. So when I've been looking at the daily chart, I've been sort of umming and ahhing whether or not I've got this right, and whether or not I do, there is going to be a correction higher. And certainly looking at this chart, it does kind of, give me a bit more confirmation really that we are going to see a decent move to the upside, and the 38.2 is what I've been speaking about for a while. That's at 106.15. If we take a look at the daily, we can see that it matches up with the same level. So we've seen this break of the short-term downtrend. Obviously, I've got a wedge drawn from much higher up on the weekly chart, but we're above this 103.62 level. We posted some strong gains yesterday, the highest close actually that we've seen for some time, actually going back to the first week of January. And we're attempting to move higher as well today, although slightly down on the day. We can see that we're well off of the worst levels of the session. We've seen a bit of a pullback, and prices may be continuing to move to the upside. So still think there is scope for a move higher on the dollar index. And of course, it's going to have an impact on a number of currencies, particularly the majors. So still looking pretty good on that front, I think. Let's take a look at euro US dollar, because we'd expect that to be breaking down, and it is. Yesterday it closed below that 106.48 level, which is highlighted here by this black line. So previously prices have been holding above that, but yesterday we actually saw a close below that to post the lowest close that we'd seen since first week of January. So all seems to be adding up quite nicely. Really, the dollar index is just kind of the euro dollar is the reverse of the dollar index, and we're seeing that on the chart. So we're getting that confirmation, and that all appears to be lining up. So again, looking for a move down to this 38.2% fib level, which is at 104.60. So appears to be under a bit of pressure here, and correcting to the downside. Let's take a look at cable, see what's happening there. Decent-ish moves yesterday on some of the sterling crosses, as we basically those PMI numbers that came out earlier in the week, they were pretty strong for what we've expected, what we've seen recently. So on Tuesday, we saw a decent move higher. We tried to engulf yesterday the gains that we saw the day before. It didn't quite happen. So a bit of indecision, and therefore expecting more sideways chop really between these levels here, as low as 118.41 to as high as 124.30. I've got these arrows drawn on here to indicate there is a potential double top that's attempting to form. In order to complete that, we would need to see a break of 118.42. So still a long way to go there. And for now, I'm expecting more sideways choppy price action on that. Let's take a look at dollar yen. So we have this overnight testimony from the incoming BOJ governor. So let's see what's happening here. So it appears as though yen is, well, and the dollar are kind of battling it out at the minute. We did see a bit of a break on Tuesday, which is why I looked to buy this yesterday as a gun to the head trade, expecting that to hold. And it did. If we look at the zoom in price action here, we saw a pullback to the newly formed support, which held, and we closed above it. But it wasn't really enough to give me much of a winning outcome. I think it was up by about 0.3R or something. So a win's a win, but ideally we need to see some bigger ones at some point, Steve. But that's the way it's going for now. Looking at dollar Swiss, we can see a breakout here above resistance at 92.06. That's the highest close that we've seen going back to, again, early January. So that looks pretty strong, pretty robust, pushing higher again today, and confirming that we've got this bullishness in the dollar index at the moment. And again, we're looking for a 38.2% as the target on the upside. That's at 94.75. Let's take a look at the commodity currencies quickly. Let's look at Aussie. So still quite bearish on this. We've got major resistance up here at 71.36, which has continued to cap the upside. We saw a break of short-term trend. We then saw a bit of a consolidation, which looked to be maybe a continuation pattern, and prices have moved to the downside. This is pretty close now to that 38.2% fib level. That's at 67.08. So we're coming up just shy of that at the minute, but it does look like it's under pressure and potential if that 38.2% fib level doesn't hold to maybe extend lower towards the 50% fib at 66.64. Let's take a look at New Zealand dollar. So this is potentially on the cusp of completing a double top pattern. We've got a top here from December. We've got multiple attempts here at trying to break through, but I'd probably still classify that as a double top, maybe even a triple top. And to complete that pattern, we need a break of 61.93. So we are hovering just above that level at the moment. If we get a decisive break through that level, we do run into a couple of 38.2s at that point. In fact, I'm just going to go with the real one that I'm interested in, which is from the highs, which comes in at 61.45. So maybe some support in and around this region. So if it does break down, we need to be careful of that. And make sure that we don't get sucked in if that 38.2% fib level is going to hold. But if the double top does complete, it does suggest prices could move lower towards 58.54. Okay, let's take a look at one of the requests that we had. That was from Mock on YouTube, asking for a look at Swiss franc Japanese yen. So I actually really like this for a couple of reasons. So I'm going to talk about the daily first of all. So we can see here that in the reasonably short term, going back to sort of September, prices have been capped here in a sequence of lower highs and lower lows. The recent rally that we've seen, although it's been pretty sharp, has just come up just shy of the 61.8% fib level and that downtrend line coming in at around 146.10. If we look at yesterday's price action, we can see that there was a bearish engulfing candle formed and we closed lower on the session. We've had a minor bounce overnight, but been unable to recapture most of those losses yesterday. So we've got now resistance for me at 145.21. So I think this looks like it is ready to turn lower. If we take a look at the intraday charts, this is where it all starts to look very nice indeed. Potentially, we're in the process of forming a top pattern here. So we could maybe argue that we've got a left shoulder, a head, and potentially a right shoulder forming. I've got an upward sloping neckline that comes in. I've got around 144.66 because that's the key low that we posted yesterday at 10 o'clock. So I think if we get a break of that level, we are going to see maybe a decent move to the downside. That would also go in line with what we're talking about on the daily chart. The measured move of this top, so taking a measurement from the high to that neckline projected lower, suggests that prices may fall as low as 143.40. Now, I do often use some other signals and tools to help me predict where markets may go. One of the tools I like is the volume indicator. So this is a periodic volume tool that we have on here. This is 20 days worth of price action. And we can see we've kind of got a bit of a double distribution here. So we've got a distribution up here around the highs, which suggests that maybe we're forming a top. And we've got obviously a distribution down here. So we've got a fair few gaps in here where there's not much going on, and that could mean that prices could slide quite quickly. The fact that the point of control is around here gives me really a bit of confidence that prices are topping here, and we are going to see a break lower. Where we have this node here, which is very small, that can often act as a bit of support potentially on the way down, and that really lines up with that measured move target of 143.40. So that looks quite interesting. One of the other tools I like, and I know it can get a bit complicated for some, but if you use the TradingView version of this, the Elliott Wave Absolute, it can actually be pretty useful at predicting sort of wave counts and doing all the correct measurements that need to be done and adhering to the correct rules of Elliott Wave.
Show us how you did that, Joe.
Sorry?
Is it easy to show us how you did that? How you put that on there?
Yeah, so if you go to indicators and you go to Elliott wave pattern. So you click on that, that's been updated lately. So
Yeah.
the Elliott wave chart pattern, you click on that, and then you can apply it to all time frames basically, and it does all the counts for you, corrective counts, motive counts, and I've alternative counts in there as well. So I really quite like it. It seems to
So
be
if you
pretty
scroll
good.
the chart back, does it
Yeah, do all the
redraw it?
counts previously. Yeah,
That's pretty cool, isn't it?
yeah, all automatic. So
Well, we might
obviously
as well
with
pack our bags, Joe. They don't need us anymore.
well, the thing is, Elliott wave, it is a highly subjective tool. So let's see how it works. But from what I've seen so far, I really quite like it and think it's got some value. And what I see here, we've got a 5-wave count on the hourly chart. So when you get sort of 5 waves, that indicates that a correction is likely from that point. So we've seen, a 5th wave post up here, which suggests now that we may be in a corrective leg. So I'm thinking that maybe we can see some lower prices here. And that really kind of confirms for me that we could see lower prices. Now, I know just looking at the comments that
Yeah, exactly.
Moch was actually looking at going long here. And I don't know. My eyes just can't see a case for that at the minute. Just looking at what I'm seeing on the charts here, but I could be wrong.
Yeah.
So
I mean, on the sort of short-term basis, yeah, we've sort of stalled in front of the swing low from the 17th. So yeah, there is a potential. He's saying, like, he's looking at the higher highs, higher lows. We posted another higher low here. Yeah, but I suppose we're giving you sort of both sides of the equation. I think we're looking at the sort of contrarian view, which we like
yeah,
to look at, and saying maybe we've had a really nice extended move higher and maybe time for a proper correction. Yeah, but and that'll ring true, especially if the Bank of Japan raise rates.
well, the
You'll
thing that
see.
scares me with this is that we've already heard earlier in the week that the Swiss bank might be considering intervening, and that typically creates a bit of a mess in markets when we've
Yeah.
seen it before. So that could happen at any time. And also
So
we've got
they're
this
intervening.
overnight.
They're trying to weaken their currency normally, aren't they?
I think in this instance they'll be trying to strengthen it, won't they? Because they've
Right.
had a pretty weak period. But having said that, it's higher here, and I don't know. I need
Yeah.
to do a bit more digging and research into that. I'm
Yeah.
just going purely by the technicals, and obviously overnight we've got this Bank of Japan testimony as well. So, yeah, risky, but what I'm seeing from a technical perspective looks quite interesting. And
Yeah.
I can see the case for higher lows and higher highs. There definitely is that there on the hourly chart. Clearly we can see an uptrend throughout this period here, but just the way that prices are acting at the moment, and the candle that we saw yesterday on the daily, and the sort of setup that we've got there, the lower highs, lower lows, rallying into a 61.8% fib level. I just think, how much more upside has that got from here, really? Sorry to have put you off of that trade if that was something that you were set up today to do, but it takes different opinions to make a market, I guess. Right, I've got a couple of other requests. Sterling yen, let's take a quick look at that. So we've talked about this a couple of occasions now, and this is really trading technically quite nice, I guess. So again, we are seeing a sequence here of lower highs and, well, not necessarily quite lower lows. In the short term, we could argue that it's actually higher lows and higher highs. We saw the breakout on Tuesday above resistance at 63.02, also closing above a 38.2% fib level as well. Yesterday, we saw a pretty chunky retracement, probably just over 50% or around 50% of that Marubozu candle that we posted on Tuesday. So if that is the case, it is around 50%. In fact, let's just check that out, shall we? Just going to zoom right in on that, get a fib tool up and measure the length of that candle. The 50% level comes in at 62.59. So we did overshoot that a little bit. And in fact, that is actually acting as a bit of resistance today. So it's a little bit trapped at the moment. I did draw on the chart yesterday that I expected there to be some pullback to retest these newly formed supports, and likely to give it enough rope maybe to move down to 161.68. So pullbacks into that level, providing we get some constructive price action, I think could potentially offer some opportunities to buy. But again, we've got this yen information out overnight. So if you're going to trade this, I'd probably be taking a very much a day trade approach and probably be looking to get out prior to that announcement overnight, unless you're very nicely on side and want to crank your stops up or down to protect any gains that you're making. Let's take a quick look at the intradays as well, just to see what's shaping up here. Again, use the same sort of tools that we've already spoke about. See where the volume point of control is from an intraday perspective. So again, we've got a bit of a double distribution here. There's a bit of a gap here, a big period of distribution here and a distribution here. Typically, I like to see pullbacks to these volume points of control, which that can happen. If we look at the short-term wave count, we can see that we completed a fifth wave here, and we look to be in some sort of corrective phase at the moment, an ABC correction, and one of the predictive counts suggests that it will pull back to that volume point of control. So maybe that will be an opportunity to buy in there around those sort of levels, or maybe it's an opportunity to go short now and target a pullback into that zone on an intraday basis. So a couple of views there, but I think my overall view is that that looks reasonably positive based on the daily chart, which would always be the kind of market or the chart I'd use to confirm a longer term bias. Did I miss dollar CAD? I might have done. Okay, let's go back to that. So daily chart, we can see that prices broke out through resistance here. There was a couple of bands, 134.84 to 135.02, broke above that on Tuesday, posted higher close yesterday, and today we are pulling back ever so slightly down by 0.2%. So again, if we are looking for this to work in a corrective, in a technical basis, we'd expect pullbacks maybe into these kind of levels around 134.84, expecting them price to hold before potentially a continuation to the upside on dollar CAD. And obviously, if we go back to my view on dollar index, expecting more strength in the US dollar, so that would work out quite nicely with that. But overall, it looks pretty choppy here on the daily. But potential for scope for a move higher towards 136.82 would be my view. I feel like I've been chatting for ages on FX, so let's maybe kick it on to indices.
You have. I was sort of felt very redundant, especially after you showed me the Elliott wave.
You've gone mad on that now, have you?
Yeah, exactly. Yeah, I mean, this is looking at quite a large Elliott wave formation. So yeah, let's break this down a little bit. It's a little bit what I've been talking about on the FTSE, this Elliott wave type theory. Third wave is never the shortest, so I was saying the furthest wave 5 should go is.
Did you have that drawn on before you knew about the tool?
Yeah.
Oh, Steve's got an eye for Elliott wave.
Well, I was actually looking at it a slightly different way. I was looking at sort of this impulse wave starting here. So I was drawing this to there, to there, to there, to there, and then the fifth wave wouldn't be any further than that. That's what I was basically talking about. So this taking a
count on there as well.
Sorry?
They've got that count on there as well, right? Oh no, you've just done that, haven't you? In yellow.
Yeah. So yeah, that's my yellow on there. They've sort of but the third, fourth, fifth wave potential is there. It's given us a correction because we have had a bit of a reversal on FTSE. So it sort of fills me with a little bit of confidence that I might know what I'm talking about. But let's see. We're expecting after a 5-wave impulsive move high, you expect a 3-wave correction. So we're looking for the A, then the B, which shouldn't go any higher than the original high, and then a C leg lower. So looking out for that. But yeah, last few days of price action in FTSE has been negative, and yesterday sort of really tried to recover, and overnight we've seen prices move lower yet again. So we're trading at 7,911. We know we've got support, interim support at 78.78 from yesterday's low, and this swing high from wave 3, 78.77. So only a tick away. So that's a key level for me today. If we manage to break below there, then we could well be targeting a move towards the 7,700 level. Again, we've got a nice 55-day moving average coming to help support that. On the DAX, DAX frustrating me ever so slightly, a lot actually. I really think we're forming a bit of a top here, and this Elliott wave chart pattern is sort of corresponding with that potential. Are we forming the top? Really sort of, if we take out obviously the high, but we're not, it's going higher. So 15,656, we're trading around 15,500 at the moment. We're pushing. We had a nice reaction rally from yesterday's support around about the 15,243 level, and it's bounced nicely higher So yeah, we've still got a little bit of a way. We trade the break on there really. I wouldn't be so keen to sort of jump in if we break higher, because you know that the stop, the risk reward isn't quite as good. But if we manage to break that support at 15,200, then I think there's nice opportunity risk reward on the downside. Obviously, I'm always looking for the downside. The US indices don't seem to have really reacted the way the Europeans have. They're sort of like they're really under a bit of pressure at the moment. Trading around the 100-day moving average in Dow Jones. 200-day moving average is the major one. That's sitting down at 32,362. Bit of an indecision yesterday and a little reaction higher this morning off this 100-day moving average. So a little bit of support coming in at these levels. We saw the previous swing low on the 20th of Jan forming that initial support. So really sort of like looking to break below the 32,900 if we're going to get any really nice action today. However, bouncing at the moment, so looks quite positive. Yesterday's high will probably offer a little bit of resistance, 33,244, and that's just sitting above. Nasdaq, similar sort of price action. This is like telling us we're in the sort of like we just have it a correcting wave 4. So then we're looking to sort of like project higher from there. So nice little stall yesterday in the downside sell-off. We found a low, a really nice rounded low at 12,000, and we bounced from there. Trading now at 12,002, just below 12,200, which is previous support now turned resistance. So look out for there. A break above there should open up the upside. S&P's doji candle yesterday, really nice sort of sign that this short-term downtrend has stalled, reacting higher from the 55-day moving average. So another nice level to coincide with that candle, and projecting higher as we speak. So looking pretty positive on the S&P for a short-term turnaround base trade. I suppose the one market that I was thinking about looking at was the Nikkei, thinking about the Bank of Japan potentially raising rates. That should lead to a little bit of a sell-off in here. We've bounced from support at 26,975 yesterday, and yeah, looking pretty comfortable at the moment, just above the cloud support as well. But a break of yesterday's low will definitely open up downside, targeting lower price action. We're really bouncing off this like 25,622, potential for a double bottom. The neckline's all the way up at 28,500 though, so a long way to go before we get there. That's about it, Joe. Yeah, like you say, we're 33 minutes into the show. We've sort of like sapped up everyone's time. We haven't done gun to head yet.
Elliott Wave there, yeah. So let's. We all got distracted by the new shiny Elliott Wave tool. Okay, yeah, gun to the head. So this is where Steve and I pick trade ideas live on the video. As if we had a gun to our head, what would we trade right now? We are trading these live. So we set up an account with a Wanda with £2,000 in it at the start of 2023, and we're risking 1% each per day on the trade ideas that we come up with. Each of the ideas that we come up with must have stops and targets. They must have risk reward ratios better than 2 to 1. And the ideas will expire at 9 p.m. or when the stops or the targets are hit. So it's been an interesting start to the year, immediately into a phase of drawdown, it seems, which is disappointing. But we've been doing this for almost 800 episodes now. And we've got some pretty good results previously on a simulated basis. So I think we stick to our rules, Steve, and stick to our guns. And I believe eventually this will turn itself around. But let's just have a quick review of yesterday's ideas. So I was buying a breakout on dollar yen. And we can see there was a level of resistance in that black line. We saw a decent move to the upside. It was more on the daily chart that I was interested, and which kind of triggered me to take a look at this. And if we click the play button, we can see that it pretty much moved nowhere. So we did see a pullback to support, which held, which is encouraging. But at the close, was only 0.3R on side. So a win's a win. Lock that one up. Steve was looking for a short-term double top on DAX. Got off to a fantastic start, Steve. I was looking at thinking, well, it's just going to go straight to target. But at that point, it then reversed and was stopped out. Pretty decent move higher in the equity market. So, yeah, that was a stop out. So we reload the gun and go again today. Do you have anything ready, Steve, or would you like me to go first?
I feel like I should go first because I'm really letting the side down. You're sort of like holding us above water at the moment, Joe. Yeah, the only one that sort of like I'm really interested in at the moment is its negative trend on the short-term chart, and the daily chart as well had a bit of a rejection from an attempt higher yesterday. You can see this candle up here. Let's take it down to the hourly. So yeah, for me, we've sort of like got potential for a double top here on the charts. You've got the let's get the little arrows up so it's a little bit clearer. So double top here, and we've got the neckline which we've broken through, which is here. There's the swing low in between. This gives us a measured move target on this formation down to 1813. So I'm sort of looking at this and thinking, trading around 1828, we just had a little bit of a couple of dollar rally over the last hour. But yeah, it feels like it's moving low. It's sort of broken down, come up, retested. So really for me, resistance is around this level, which lines up with the cloud in about 12 hours time. So yeah, I'm going to go for this one. I'm going to set it up on the Oanda chart. We're on there now. So this is what I'm looking for. I'm looking at getting short these levels. The stop around about the 1835 level, and looking to target a move. Well, what does 1813 give me? 2.52 to 1. That's not bad. I'll go for that. If I can manage to get this on, obviously you've got to think about the money that's in the account, the margin, etc., etc. So we're looking to sell at market. My stop loss going to put in here at 1835 and targeting a move to 1813. 2.3 to 1. That looks right. Does that look? Oh, risking 1%. That's the closest we can get. 3 lots. So the actual risk is only $16.50, slightly less than 1%. We'll stay under 1%. But yeah, because of sort of like the, it's probably 3.5 lots that I've got to sell, but I can only sell 3 because we've got that the size of the account. So yeah, that's me. I'm in. I'm on it. 38 quid coming your way, Joe.
So, Steve, if you can load up the Euro Yen chart for me, that would be very helpful. And I'll talk through my idea for today using all the tools today, Steve. Right, let's go. Right, Euro Yen. So, hourly chart looks to me as though it's in the process of forming a bit of a top here. So, we have potentially a head and shoulders here on the hourly, something like this. We did have a little bit of an overshoot there, maybe a right shoulder now in the process of forming. So looking for a short-term head and shoulders top. Just going to take this back to the daily first of all, because I should have done that first. Sequence of lower highs. We did see a decent move higher through resistance at 142.93 a couple of days ago, and prices are held above that since, but we've rallied into a resistance at 143.86. And if we look at yesterday's price action, we can see a bearish engulfing candle. So that gives me enough of an incentive to try and trade this from a short side, because I think that the daily bias here is potentially for a bit of a reversal. Now, if we take a look at those intradays again, we've got that head and shoulders top. I'm going to use the volume point of control as well, just to see where the control point is, and we can see it's pretty much where we're at the moment, which suggests we've had a decent distribution of price, which may indicate a fall to the downside in the short term. So that's one bit of confirmation that I've got, and we'll look at our Elliott wave tool as well, shall we? So one of the larger wave counts in blue suggests that a 5-wave count completed. We've also got a shorter term wave count in there as well, and suggests now that we're in the process of a corrective move, a corrective ABC move. So we've seen the 5th wave down to an A move. Now we're doing the B leg, and the projected C leg goes all the way down as low as 141.61. That's a 161.8% extension of this corrective leg here. So if we just take a measurement from that top of the wave 5 down to where it's saying the A wave has finished, up to the top of the potential B wave, we can see that 100% of that comes in at that target there at just below 142, but I'm going to put my target at 142. So I'd like to sell at market, Steve, with a stop just above the B leg at 143.32. Now, obviously, these moves can be invalidated. These wave counts can be invalidated quite quickly, but it seems to be a few bits lead that are sort of lining up for me on this to suggest that I want to see lower prices, and I want to be out of this before the BOJ chat overnight. So these trades will close at 9 p.m. UK time. So for me, I'm happy to have a punt at that on that basis.
Yeah, nice one, mate.
So that's going to get published up to the profile as well. So if anybody wants to check that out or follow its progress throughout the day, you can do that very simply by going to Signal_Center on TradingView. Okay, let's kick this on, Steve. Let's look at the day ahead. So we've got US GDP due out today. That's at 1:30 UK time. That's the fourth quarter second reading, so that could create some volatility. We've also got US jobless claims at the same time. Obviously, been a fair few comments about the labour market at the moment with regards to interest rates in the US, suggesting that it's quite tight. So that could be a number that's well watched as well. And don't forget, next week we've got the non-farm payroll number. And then at 4 o'clock today, we have the US EIA crude oil inventory numbers. So we've seen already a pretty big decline on that ahead of today's number. So let's see if that sparks any more volatility. We haven't got on here about the BOJ testimony, but that is happening overnight. I'm not exactly sure of the time, but do check that out on your economic calendars to be aware of when it is. Tomorrow we have some inflation data from the US. It's the PCE prices index, and then next week we've got the US ISM manufacturing index number, which again will be well watched. Okay, bit of a bumper session today, just over 40 minutes. So let's wrap it up there, Steve. I hope everybody has a fantastic day. Good luck if you're trading, and we will see you tomorrow.
Yep. Cheers all.
Bye-bye.